Welcome to the next edition of Pizz-Spectives. My name is Rob Pizzichetta, founder of Mont Wealth. The guys did this a few times already. General advice disclaimer. Anything we discuss today, general advice only. Anyone acting on this advice does so entirely at their own risk. Now, I'm Anna Vocale, John Morello, and Jane Skinner. Now, Jane, I might hand it over to you to do a bit of an intro. Tell us a little bit about your business and who you are and where your market is.
Yeah, great. So I'm Jane Skinner. So I work for Walsh & Whitelock. We operate out of Sydney Road, Brunswick. I've been doing this for well over a decade. I'm a third generation real estate agent. So my grandpa worked for Walsh & Whitelock. Their mum and dad are my directors. And I'm in sales and an auctioneer as well. And our company does a lot of rentals, residential, commercial, owners court management, and we do commercial sales as well.
Fantastic. Now, Jane, completely my fault, and I know you've got to rush off to an important meeting. So I'm going to just ask you a few questions before you have to head off. Now, in this market in the north, you're seeing that's a lot of demand from first home buyers. Can you talk us through a little bit of that?
Yeah. That under 800,000, under 750,000 markets trading really well. We know they'll only sit on our books for 4 or 5 weeks and we'll get a really good result. A lot of that's been driven by the Vic Home Buying Scheme. Yeah, in my whole career, I've never really seen people use those schemes that were out there as options, but this home buying scheme's been utilised. So it's where the buyer saves a 5% deposit, the government owns 25% of the property and you own 75%. But it's really got that young home buyer, first home buyer into the market because you can buy a 1-bedroom apartment in Brunswick for mid-threes. If you were trying to rent that, you'd be paying about $500 a week, whereas you can actually buy it and potentially your mortgage repayments are even slightly less or on par with what you'd rent it for. So it's really pushed that market along and got the investors out a little bit and put first home buyers and home buyers, owner occupiers into that market.
Yeah, great. And so just on the investor side, you're seeing a few disgruntled landlords that are potentially wanting to get out of the market. What tips or advice are you giving to the landlords at the moment when they're looking at selling a property?
Yeah, you'll get good money at the moment. Yeah, it depends what your stock is, but you should get pretty good money at the moment. Funnily, we are seeing a bit of Melbourne landlords getting out, but then we've got a whole heap of interstate, mainly based in New South Wales, investors buying up.
Wow.
Which, we're getting advocates calling us from New South Wales saying, what have you got? This. And so we've sold, always bring your stats, Rob. You're a stats man. We sold one in Ferry Crescent, Brunswick West for 1.6 million. That's a New South Wales investor. We sold a house in Shaftesbury Street, Coburg for 1.56, another New South Wales investor. And another one, we didn't sell it, but we're renting it, Appleby Crescent, Brunswick West, sold for 1.7 and 5. And that also went to a New South Wales investor. So it just tells us that they can see there's going to be growth because your return's all right. You get about $1,000 a week for that type of property, depending what you're borrowing, etc. But they expect, and we expect, there'll be growth. So they're long-term holds buying that house.
Fantastic. And so from the vendor's perspective, we spoke offline before about realistic pricing. So even though we're talking about these numbers that are being sold, what kind of advice are you giving owners of properties when they're putting their property up for sale?
Yeah, look, you will get good money in the market at the moment, but just have realistic expectations. You've got to look at what else is out there, what you're up against. And I don't think we're going to see a sharp incline in value in the short term, in my opinion. We're not economists, but we're at the coalface. I think you will get good money at the minute. Speak to your real estate agent about realistically what you're going to get. And just having that expectation when you go to market that, we're probably not going to smash any records at the minute. You said about the 2022 peak. We're probably coming back to there now, but not yet smashing any goals.
Yep. And you're right, Jan, I do the stats. So here are some stats. National house price is up 3.7% over the last 12 months. And combined capital's around 3. Melbourne is lagging, and to your point, 0.5% year on year, still below March 22 peak. But I'm not an economist either, but expected to be the leading candidate in Australia for growth. Listings down 11.5% versus last year and about 9% below the 5-year average. New dwelling approvals remain below the 10-year average, so there's still a supply issue in the market. Gross rental yields have stabilised at about 3.7%, so it's a bit like you're saying before, Jane, about 50,000 on a 1.5 is there or thereabouts. National rents saw about 3.7% year-on-year growth. Melbourne rents rose only 1.1%. However, rental growth is rebounding, so that's a sign and maybe something that the RBA will look to. So I might bring Adam in now, obviously a bit of a specialist down the Mornington Peninsula side. Adam, you want to tell us a little bit about your business?
Yeah, so we're part of the Giles Craig network. We've got an office down on the Southern Peninsula in Sorrento and Rye. We specialise essentially anywhere from rosebud right through to Portsea, but a little bit more of a focus from Rye through to Portsea. At the moment, we've probably seen that there is a little bit more buyer confidence coming back into the market off the back of a fairly quiet 3 or 4 years since 2022. And then we're also starting to see that there's a little bit of an equilibrium coming back into the market in terms of values. There was a lot of skewed data there for a while. Some people were a little bit more reluctant to sell, others were a little bit more needing to sell. And so therefore you could pick that there wasn't much of a correlation between some sales virtually around the corner on the same offering. So at the moment, we're hopefully starting to find our feet with values in regards to more consistent results. And hopefully we start to see a little bit more of a shift where there's a bit more of buyer urgency, or not necessarily urgency, but a little bit more of an appetite for buyers. As to Jane's point, we're starting to see investors come back into the market. A couple of those have been interstate investors, which is really positive. And certainly the first home buyer market is really starting to pick up as well. That's certainly an aspect of the market that we're starting to see move a lot more than what we were 12, 18 months ago.
Interesting. I might hold you at that point, and Jane, you've got to head off. So I might allow you now to give yourself a bit of a plug and how people can get in contact with you.
Yeah. As I said, I'm in sales and auctioneer. Love what I do. Inner North is where we operate out of. So Brunswick, Coburg, Pasco Vale, the kind of main ones, but we're not a franchise, so we can sell anywhere if you want me to. You can always call me directly on 0438530080 or head to our website. Thanks, Rob. Never miss a plug, never miss an opportunity. Dad always taught me that. But yeah, love what we do. And yeah, thanks so much, Rob, for inviting me on. Sorry, I have to rush off. We're real estate agent. Yeah.
We'll make sure
We run tight schedules.
Yeah, we circle back in 6 months and reflect and then forecast again. So thanks so much for your time.
Yeah. Look forward to it. Nice to see you all.
I'll see you, Jane. Thank you.
Right, see you then. Bye.
Bye.
So, John, before I get to you, Adam, let's go back to that first home buy point. Like, where exactly within down the beach side are you starting to see a bit more demand for that affordability and opportunity?
Definitely around that Rye pocket. And it's probably the affordability piece comes from, it's very much suburb driven. So, for example, I mean, even when you look at Blairgowrie and parts of Sorrento, there's still some really good value and some affordable properties there, but that's creeping more into the 900s to $1 million. I think in terms of first home buyer grants that kick in, I mean, there's a lot more incentive for buyers to be purchasing at a price point, but also to the affordability piece of interest rates coming back. It just helps their borrowing capacity. So a lot of these first home buyers that are coming through are looking predominantly around that Rye area. There was a property that we had on the market. We had about 28 groups through on the first Saturday. We haven't seen those numbers for years. And so it was really refreshing to see. And that was a mix of investors, first home buyers, predominantly first home buyers, some downsizers. And I know John speaks about the opportunity to purchase in his market from a downsizer point of view, but on the peninsula, there's a lot of transitional buyers. So they're the ones that are selling in John's area, and they're arguably coming from that family home of $2, $3, $4 million, and they're coming down to the peninsula. They'll get a bolt hole in the CBD. I spoke about this last time, and then they'll try and find something on the peninsula. So we're really starting to see that buy trend coming to fruition. Certainly at a price, I feel like Rye, this market down here, in my opinion, it's not going to get any more affordable. This is the bottom of where we are, and it's only up from here. It's not going to happen overnight, but it will happen. And it's something that I think buyers, if they're serious about buying down here, they need to really start to get their ducks in a row, because in 6-12 months' time, I think they're going to be competing quite heavily for properties.
Interesting. Now, John, Adam spoke about the $2 to $4 million number and then the downsizer. What are you seeing in your market, and where are you playing at the moment? Can you just remind the listeners of your business?
So, yeah, we're predominantly, I say, that owner-occupier market, anywhere from apartments and townhouses in, say, North Melbourne, West Melbourne, Kensington, through to traditional classic single front Victorian in sort of Ken, Flemington, Ascot Vale, through to that family home market, anywhere starting from sort of 1.8 through to up to $4 million in excess of that in some cases when you start moving into that Essendon, Strathmore, Aberfeldy market. We've got a real cross-section of property that we do sell. Very much, there is a lot of that owner-occupier trading up and trading down at the moment. There's families that are looking to get into that next family home that have been sitting on the fence, have got plans and permits potentially ready to renovate or build. But again, building costs, they're probably somewhat, I would say, I don't know what the data's sort of what you're seeing, Rob, but I think they're plateaued. You're not necessarily seeing the increase of building costs at the moment. I think costs have somewhat found their level. However, I think that the convenience factor and putting a value on, you know, what I say, your time and effort and lifestyle, are you better off buying something that's already made, what we call turnkey? So there's a bit of that. And then we're seeing the downsizers that are becoming more inquisitive now. Okay, we've been in the family home for the last 20, 30 plus years. We do want to downsize. What options do we have? And that's probably where there's a real gap in the market in that inner northwest of Melbourne. There's a few sort of larger infill developments like the Moonee Valley Racecourse, Moonee Valley Park. That's a sort of a bit of a 10-year plan. There's been some extraordinary sales taking place there in terms of the pace of the sale, but also the values that have been achieved on a square metre rate for that higher end owner occupier apartments. But if you wanted a smaller boutique block of 20, 10, 20, 30 apartments, there's not a lot of those options. But then we're seeing owner occupiers starting to, those downsizers looking at those renovated, say, period homes or new homes or a side by side like a dual lock, providing there's a bedroom, the master bedroom needs to be downstairs because they're obviously saying, look, this is potentially the last home that we buy before we sort of transition in either into aged care or some sort of full retirement living.
Yeah, understand. So, Adam, just on that down the beach, I'd love to go into a bit more detail on this. We know that looking at the data and the numbers and the performance, especially over the last couple of years, Sorrento, Porty, Blairgowrie, Ryegowrie, whatever you want to call it, you've really seen property prices coming off 10, 15%. Do you feel like that's now stabilised and the demand's lifted? Like, of those properties that you're opening now, are you seeing more inquiry?
Look, it's interesting, Rob, because obviously I speak a lot about first home buyers and transitional buyers that are looking on a permanent basis, but for the best part, our market is very much a discretionary market. So a lot of people start to tighten up when it comes to, okay, what can we afford? And with the cost of living pressures across the board, the last thing that people are really thinking about is purchasing a holiday home. So in some respects, the demand is there for the right buyer demographic. In terms of holiday home buyers, there's very few on the peninsula at the moment. I do feel as though that there's a lot of aspirational buyers that are starting to see the value and they can see themselves actually purchasing, hopefully, a generational holiday home for them and their families. But also, too, there's a lot of sellers that have, and we spoke about this last time with the generational families, where it's been in their family for quite a number of years and they've bought it in the 70s. And unfortunately, the land tax and all the taxes that are associated with owning a second or third dwelling has come into play. And when there's three siblings that own the property, all of a sudden they're arguing over who's used it more or who's going to pay the land tax bill. And so they're just going, let's just sell. But of course, then you need to find that incoming purchaser. Certain properties are selling better in areas, and that's price driven, but also to the offering overall. As John touched on, turnkey, which is a completed product, is selling really well in terms of cost of construction and renovation and all that sort of stuff, which grew such an exorbitant amount as property prices did. Some discussions with builders are that it is stabilizing. So people are getting a little bit more comfortable about rolling up their sleeves and doing some work themselves or getting trades to do work themselves. But at the same time, I certainly feel that in pockets and in demographics of buyers, buyer profiles, we are seeing an increase in demand. But for the most part, we're seeing that discretionary buying, being that holiday home, there's probably not as much of that as what I'd think that we'd see in the next 12 months.
Okay. John, we've had 3 rate cuts over the last 9 months, maybe 12 months. Expectations of maybe 2 to 3 more over the next 12 months. Does that change the sentiment towards property, or is it still an affordability issue?
I think it's probably more of a confidence driver for people to actually start making decisions. I feel like a lot of buyers went into what I call a bit of a holding pattern. And even though there might have been that, I call it that motivation to do something, whether it's upsizing, downsizing, right sizing, whatever it might have been, I think a lot of people just took the wait and see approach. Whereas now with the interest rates having come off two or three times and the prospect of potentially a couple more, it's just giving a bit more confidence to people to get that process started again and saying, okay, we know what we're working with. I think the cost of living pressures are still in the background. I don't think with these interest rates coming down, again, I'm no sort of banking regulator. I don't think people's borrowing capacities are going to significantly increase overnight to fuel the market into a frenzy. But it's certainly going to get more buyers into the market, which will then have that, what I call that competition factor, which is a good thing. And hopefully we get to start to see a bit of movement in the pricing back to the 2022 levels and hopefully slightly more. But there is structurally and fundamentally, particularly here in Melbourne and Victoria, there's still a lot of variables that are playing out that none of us have got controls over. From a government policy perspective, the cost of living, obviously that's an Australia-wide thing, but I think for property owners here in Melbourne, there's obviously that cost of holding a property plays a significant part of people's buying decisions today more than ever.
Okay. And so what's your opinion, Adam? I'll start with you on, does an increase in listings, given the demand coming, do you feel like that'll drive and stabilise pricing, which then drives more listings? As I said earlier, what are we down? 11% year on year and 9% over the last 5 years. What's your views on that?
We're certainly down from this time last year in terms of listings. And I think a lot of it is because our market is very circumstantial. It's maybe an affordability piece where people are selling or because they're just simply not using the house or it's just time. Whereas you look at a Melbourne market similar to John's, everybody's moving closer to schools, that they're having families, they need to grow out or they're growing out of their space. So this time in comparison to last year, August is typically a very quieter month, and then spring, which is September, October, November, December, that's when we start to see listings grow. In terms of my personal pipeline looking forward, there are some good properties coming to market, but at the same time, there are a number of vendors that are just potentially holding off to wait and see what happens. And I think there is a bit of a holding pattern across the market. And from what I'm seeing, where buyers are probably just going, we just want to wait and see, but then sellers are also, we just want to wait and see. There's a lot of hype around increase in prices and demand. But further to John's point, that there's going to be some competition, but it's not going to move the needle by any stretch of 10, 15, 20%. I think we're quite a while off that. I do feel like there is going to be a little bit more of a competitive edge when it comes to purchasing properties, as opposed to just being one out on a property on the peninsula. You might be in competition with one or two others. However, but it's only going to drive the price up maybe another 5, 10, 15,000. I think people are still, or buyers are still very gun shy, and they're still making sure that they're doing their due diligence and making sensible decisions around buying. I think we're a while off seeing a massive increase in pricing and potentially selling $200,000, $300,000, $400,000 above reserve for a particular property.
And what do you see in your market, John? Similar?
Yes, similar. I think listings are probably starting to increase now. I think we've listed well for that September, already pushing into October. We like to run like an in-room portfolio auction, at least sort of 4 times a year, particularly leading up to, it's not a new concept in Melbourne, but when it comes to residential, it tends to be, it's more of a commercial thing. But we've run 2 so far this year that have been quite successful. The last one, we ran 15 in-room auctions and we sold 11 on the evening, and I think a couple of more in the preceding days. So we typically run those just prior to a long weekend. So our next long weekend is grand final. We don't have to worry about it, Rob, being Carlton supporters. But so we typically run a Wednesday evening portfolio auction. We're aiming to, again, get to 15 auctions. I think we've listed six or 8 so far for the 23rd, or I think it's the 23rd or 24th, whatever the Wednesday is, prior to that long weekend. And also just to take some pressure off, we call them the Super Saturdays. So Super Saturdays tend to be the Saturday prior and the Saturday after a long weekend. We've also, in the northwest of Melbourne, we're fortunate enough to have 2 of the biggest horse racing races and obviously venues being Flemington and Moonee Valley. So we do get a bit of interruptions around October, around the Melbourne Cup, and prior to that, the Cox Plate. So we've also just got to be quite strategic around when we're holding auctions, because with the traffic and just getting around logistically around our part of town can be a little bit challenging. Yeah, we seem to be listing quite well. I feel at the moment, someone asked me this during the week, where do you see the market? I feel like it's a bit of a balanced market at the moment. I feel like the supply is being met by the demand. I don't think there is multiple bidders at auctions. When I say multiple bidders, 2 to potentially 3. In some cases, there's been 4. But it's still, I say this, it's still a value-driven market. So if the pricing is slightly off, and we can see it within the first, we've got a lot of data points that are fortunate to to have access to today through Jealous Craig Live, which is a platform that we provide to all our owners, which is live 24/7 data from the back end of our CRM or our ecosystem. It's an open wide Jealous Craig database, and it also feeds into realestate.com and Domain and all the other social media portals that we do access. So it's a one portal, one screen opportunity for our vendors to see how inquiries going, what what we call the save and shares are, and then we interpret that data to our vendors around. But we're seeing it right now in that first 7 to 10 days. If the numbers are not coming through, translating into open for inspections, then typically we know we're probably slightly off on price. So there is a few what I call price adjustments, still conversations that need to be had. So as I feel like I think we're into some good times in this spring, this up and coming spring market. But I think coming back to, what Jane touched on earlier, I think vendors' expectations also need to be realistic to where the market's at. And you can't expect, there's been a 0.25% rate cut that it equates to a $100,000 or $200,000 increase in your reserve price. And I'm very much still pricing property, and we encourage our team to really price property based on what's happened in the last 30 to 60 days, maximum 90, and then what's currently for sale at the time that we go to market. So what's our current competing properties? Because our obviously interests are to make sure that our properties that we're representing for our owners are getting the best inquiry, the best inspections, the best feedback, so then we can make the right decision when that decision gets presented by way of an offer.
Great plug for the business there, John. Adam, I'll come back.
Thank you.
Just on, you spoke earlier around the Rye market, the first home buyer, plenty of interest there. So let's talk a little bit about the other areas, obviously intergenerational, or whether it's people that decide, I don't necessarily need to live in a $3 or $4 million house in Melbourne. I can buy a $2 or $3 million house down in Sorrento. Are you seeing that downsizing shifting from Essendon down to your side?
We definitely are. And I think part of the Jealous Craig network, there's great synergies between all offices. But I think the main areas that we see that there's a lot of buyers that have good relationships with agencies, it's probably more around that Stonington, Borough, Bayside, and then obviously John's Market as well. We see a few sort of coming from a tree change or a sea change, like that Eltham around Warrandyte, those sort of pockets, and Doncaster. But we are starting to see that's where the general trend is going. Those transitional buyers, though, that they've got a very specific criteria in that they all typically want around that 4-bedroom, 3-bathroom, 2 living areas, because they've got their children and then their kids, so grandchildren in mind when they come and stay. They want something that's single level, relatively modern, updated. And for that sort of price point, you could get something, for that sort of criteria, you could get something around the price point of high 2s, early 3s, and that's in a really good location and built really well. The value for money is down here. And when you look at it in comparison to what is on offer in all those other suburbs that they're coming from, which is arguably only an hour to an hour and 20 away, if they can have their bolt hole in those areas, be it a town residence or an apartment, and then they have their main residence here, also too, the dynamic of land tax will completely shift, because their PPR would most likely be on the peninsula at the more expensive property, and then obviously going to have their secondary house down there. I certainly feel as though that's just going to continue to bubble along in terms of that transitional buyer. I still feel as though that there's a lot of growth in this market from a permanent resident point of view, as opposed to just purely a holiday destination. Year on year, it's getting busier down here. And for the same reasons that my family and I moved down here, it's because life's better down by the beach, and it's certainly got its nice feel to it. But also too, your dollar goes a lot further in comparison to what you can buy. And you're still only, and I say only, you're only an hour away from arguably the suburbs that you need to be. And you can sit in school traffic from Kew to Hawthorn for 40 minutes in a morning. So why not add on an extra 20 and you can commute to where you need to be if that's your situation.
Yeah, I often hear John Morello talking about life's better by Mini Ponds Creek. It depends what.
It's more water.
Narrabeen River on. You got the wrong.
No. Sure.
Yeah.
Now, I'll ask both of you this. What's some of the issues you're hearing from landlords at the moment? Obviously, land tax is killing people. Can you talk us a little bit about that and where they're at? Are they thinking about selling, given then they're hoping for better prices? John, you first.
Look, I think, again, there's been a lot of change from a regulation, from a compliance perspective with the Residential Tenancy Act in the last couple of years. There's been a lot of catch up to do from an ownership perspective with a lot of owners. We were very on the front foot with a lot of these changes and compliance requirements. There was obviously a bit of a moratorium period where you didn't have to have certain things upgraded by, but I think that's all passed now. I think that's put a lot of pressure on, particularly that more intergenerational landlord, that maybe where families have inherited properties, the cost versus the benefit of the capital growth has already happened. When you factor in all the compliance costs, the ongoing maintenance costs, and then your land tax, which has probably been the biggest bugbear for a lot of property owners in that rental space. I think that's been the biggest challenge for a lot of owners, and they've just weighed up and said, can we get better returns elsewhere for our money, and can we make life a lot more simple than it needs to be? Obviously, the quality of an agent really plays a big part, and the experience of the agent, of a managing agent, plays a very big part in that landlord property owner experience, being able to navigate all the different, the changes now. But I feel like there's still an element of, it's definitely, the wave has slowed down in terms of landlords wanting to sell to get out. However, there is still an element where people are just saying, you know what, we're at a stage of life, we're nearing retirement, where our lifestyles is changing. We'd rather sell our investment and our principal place of residence and either upsize to something that's really a lot more comfortable for us, or let's buy that coastal property down by the peninsula, and let's get it as a bolt hole in the city, whether it's an apartment or a townhouse. So there's still a bit of that going on. I think, touching on what Jane said, we're still seeing interstate investors coming into the market, whether it's from WA or New South Wales, Queensland. I know if you look at the totality numbers, I think Melbourne is the second last of ranking in terms of median prices at the moment. So there's definitely some future upside, and the interstate investor probably looks Melbourne looks like a great opportunity. I think for us Melburnians that only probably know Melbourne property, typically we've probably tended to be a little bit more, I wouldn't say negative, but a bit more depressed about what the prospects are. Whereas the interstate owner comes along and says, what an opportunity. And that's the market. That's in everything we do. Where's the opportunity lie? And I feel like there's only one way where values can go here in Melbourne, and that's certainly up. And I think it just comes down to the cost of doing business here in Victoria is greater than other states. But there's nothing to say that in the future that other states don't follow the Victorian lead when it comes to property taxes. But that's probably a whole conversation and discussion in itself.
Yeah, and Adam, your landlords in your area are frustrated with land tax and issues as well?
Oh, absolutely. And I think John summed it up. Obviously now there's been a shift, or a dynamic shift, in the tenant's favour. Maintenance is a huge factor. And especially when you've got a lot of those absent landlords that don't necessarily live in the area, they need to have a really good relationship with their property manager. And typically the value purchases down here are going to be homes that do require a little bit of work and maintenance along the way. So it's just something that they need to factor in, that on the surface, it can look like a really affordable buy, but if you're constantly having to do the maintenance or the updating, then, you know, it doesn't necessarily set yourself up for the best investment. But for us, anything around that sort of 1 to 1.1, you could expect a return of around 650 to 700 a week, depending on the quality of the home. And there's still demand from a rental point of view. It's certainly there. There's probably a couple of pools of tenants, and that's locals that want to live here, but also too, and more so around Sorrento and Blairgowrie, Sorrento and Portsea, that from a short stays point of view is quite expensive to rent in the peak times of summer. So some people are going, okay, what does it look like for us to have a 3-bed or a 4-bed property shack, so to speak? We could rent that for maybe $700 or $1,000 a week. We can share that with a sibling and their kids, and all of a sudden for about $25,000 a year, you've got access to this property all year round. But also too, it's a bit of a try before you buy. If you're looking to potentially purchase a holiday home or make that transition down here, it's a relatively affordable opportunity where you can actually determine whether or not this is for you, and you're not doing it over a 2-week period where you're arguably paying that 20 or 30,000 for the week.
Yeah, fantastic. All right, I'll wrap it up there. Adam, do you want to just give us a plug on how people can get in contact with you?
Yeah, absolutely. Adam Vocale from Dallas Craig in Rye and Sorrento. Feel free to reach out through my contact details, but certainly happy to talk about any of your buying needs, whether it be investment, a holiday home, or perhaps a transition down on the peninsula.
Yep, thank you. And John?
So John Morello, Dallas Craig in the northwest, so Kensington and Moonee Valley and surrounds. If there's anything we can assist on the buying, selling or leasing front, more than happy to do. Obviously being part of the Jealous Craig network of offices for over 14 years. We're very connected through not only Melbourne, but regionally as well. I often get a lot of people ringing for advice and who to speak to in a particular market. And I feel like we're very fortunate through the network of Jealous Craig to be able to point clients in the right direction, whether it's within Melbourne or outside of Melbourne. More than happy to take your call. And I'm sure Rob will put all our contact details in their show notes. Yeah, thank you for having us again. And we look forward to hopefully another catch up in 6 months where we can talk about how great the last 6 months was.
Let's do that. Thanks so much for your time, guys. Much appreciated.
Thanks,
you.
Rob. Take care. See you, John.
Take care. All the best. Cheers.
Bye.
Bye. Thanks, Adam.